Well, I'm going to be honest, and you probably know this already. I don't really think about the short-term price action of gold and silver at all. It doesn't faze me in the slightest bit what happens to it in the shorter run, up or down. I don't really care. Eventually, we're going to see, obviously, a meltdown here in the debt market. The debt market meltdown is going to put an enormous amount of pressure on the stock markets of the world. Cash is just going to move. It's going to move into commodities, gold, silver, especially other commodities as well, crude oil, in a big way. Uh, I think we're going to see more volatility here. Let's discuss some of that. What's happening? All right. In my opinion, and I've been saying this for quite a while, the Federal Reserve is not done. They're going to keep pumping this market. They're going to keep rates suppressed more so than people can possibly believe. I also have been explaining to people, and I believe this. I can't see another way around it. The Fed's going to cut rates moving forward. And we're going to see a couple of phenomena occur. Again, bond yields are going to drop. We're going to see the relative strength of the dollar fall. We're going to see risk in this market drop. The environment is going to remain risk on, meaning cash making its way into the stock market, until they're done. And look, I look at risk in this market more so than anything else, and I have an indicator for that. You probably know the MMRI, Mannarino Market Risk Indicator. It's free to everyone on this planet that wants to use it. Right on my website, traderschoice.net. We've been watching this thing fall like a rock as of late, along with bond yields dropping, dollar dropping. It's an incredible situation that we're in, but it's all about keeping the stock market propped up for now, creating a risk on, meaning cash making its way into the stock market. Most people don't understand how that works, but when you have this kind of situation here with suppressed yields and Fed buying it all, and this method of weakening the dollar, which all central banks do, they all manipulate their currencies here, none more so than the Fed, it opens up this doorway for cash to make its way into the stock market. So that means we're going to see more volatility with regard to commodities, I think, moving forward, up and down, up and down, up and down. I think it's going to present opportunity. I've been screaming from rooftops about this as of late. Look, we got to take advantage of everything that comes our way, and I mean everything that comes our way. If we see price action of commodities drop, you got to buy more of this stuff. You got to get involved here. I've been telling people for a long time to get long commodities, being involved at least through some mechanism, whether you want to hold it in your hand or you want to invest in an exchange traded fund, an ETF, or something along those lines. But you need exposure. We got to get ourselves in the right spots now for where this is eventually going to go. So with that said, predicting price action of gold and or silver moving forward, I hate doing it. I don't even think about it. I don't even think about it. I look for opportunity to I haven't bought gold or silver in quite a while. I already have a pretty substantial amount of this stuff. I also own platinum and palladium as well. I'm not saying I'm not going to add to it, but I just haven't in a long time. Like Bitcoin, for example, I bought Bitcoin. I started buying again at 17,000. I haven't bought it since. Doesn't mean I wouldn't buy it now. I think it's a bargain here. I really do. But right now, what I'm looking for, I'll tell you what I'm looking for. I'm looking for this market to drop a little bit. I already have some dry powder. I want to buy more of this market. As long as they can keep risk at bay, as long as we see bond yields dropping, we see the dollar weakening on a relative strength basis. It's a no-brainer. It's a no-brainer to gauge where the market is going to go, unless, of course, a black swan event, some other kind. And they get crude oil to play, and I think they're going to. We've been bottoming out for a while here, I think, with crude oil. And we had this whole contango thing going on, or a pump and dump, however you want to look at it. And it's kind of crazy too. So once crude oil starts playing, and I'm sure it's going to at one point, we're going to see again, crude oil pushes up the not just the energy sector, but also the financial sector. These two sectors of the markets get boosted, pushes the whole damn market up with it. So there's a lot of things going on right now. But to me, I'm very bullish in the market right now. At least in the short term, because I believe that's what they're going to do. They're going to maintain the illusion of the market, which is a very powerful thing. I think there is a very concerted, strong effort to sidestep the dollar in every way. Because look, but people don't understand is when a country like the United States now is able to have the world reserve, it gives that nation an enormous boost. We get to export inflation to the rest of the world via that mechanism. The world's getting kind of sick of it. They've had enough of it. And I really believe that the Fed will defend the dollar, even if they have to slaughter as many millions of people. They will do that. But there's an effort going on. It's been going on for quite a long time to sidestep the dollar dominance. But there's another thing going on too. Central banks collectively, and I've been talking about this maybe before anybody, I don't even know, but many years ago, I started talking about how central banks are deliberately destroying the value of their currency, all in an effort to roll in a new system. I know there's a lot of talk about backing the currency with gold, but what people need to understand is, first of all, gold would have to be revalued, not that they won't do it, but they could definitely revalue the price of gold much higher. And then the other thing that they need to do, I mean, would it be a fractional reserve? Would it be 100% backed? I mean, there's a lot of questions here. And again, the thing with central banks is their power only resides in one thing, and that's their ability to issue debt. And they're going to fight to the death to continue to do that. That's their Achilles heel. If we could prevent, and I've been telling people this for 10 years, let's say the Federal Reserve from issuing $1, just $1 of debt, the entire system implodes. But the mechanism here, I mean, look, what's going on? Liquidity is drying up, cash is drying up. There's not enough cash to go around. The system demands that more cash be pulled into the system in enormous amounts, exponentially. It can't stay static. And this is why you're seeing things like expanding wars and whatever else they got to do to foster that illusion of liquidity. And then they're pulling liquidity out of the system as well. By design. They're killing it. They're deliberately collapsing the current system, in my view, to roll out a new one. And I was talking to a friend of mine this morning, and we were talking about this very thing, how they're going to force people, or they're going to at least attempt to force people to accept the new system, digital currency, central bank. Look, the Bank of International Settlements, right? Their mission statement tells us all what they want to do: a cross-border digital system. They're the central bank of central banks. That's what they want. It's all about control. And I mean, all of these currency wars, look, what we need to do, all this stuff is great to talk about and think about and speculate about. But for the individual person, what does it boil down to? It boils down to, the plan that you and I seem to be following, you guys and me, and hopefully most of our listeners out here betting against the debt, becoming our own central banks, holding hard assets here, getting long the market if you are so inclined. A lot of people don't trust the market. I don't trust it either, neither do you guys, I guarantee it. But you're taking advantage of what you see. And that's what we need to do. Fear is a very powerful thing, but it also paralyzes people. Unfortunately, people get afraid. They don't want to do anything, and there are consequences to that too. By not taking action there are consequences to it. But to me, and we just spoke about this, the opportunities are everywhere. They're abounding right now with regard to understanding what the Fed is doing, what central banks are trying to achieve here, to own it all, to be the lenders and buyers of last resort, shutting down the global economy. And we got this number, you guys probably were talking about the same thing, this GDP number today, they revised it. Oh, it's much higher. The economy is doing so great. No, strip out spending and we're in the negative. Our economy is contracting at its fastest pace ever. But again, it's the propaganda ministry, the deceptions, the distractions, the look here, the don't look there, all the stuff that you and I talk about all the time.
Well, speaking of debt, Gregory, so, in 2008, every major economy hit 100% of GDP in debt. So this is interesting. But since 2009, all central banks and, the Federal Reserve, the economy, they reset interest rates to near zero levels in 2009. So what's interesting here is just something I wanted to bring up, that how since they reset interest rates to near zero in 2009, ever since then we've been on this 4-year cycle where the interest has to get repaid, the debt has to get refinanced every 4 years. Now that every 4-year cycle aligns perfectly with this so-called Bitcoin halving, where the market's pumped to the freaking moon every 4 years since 2009. And if you layer the charts on top of each other, they align and they coincide perfectly with one another. So there's no coincidence there.
No,
this is very interesting. And actually, somebody that used to work for Goldman Sachs, his name is Raoul Pal, he actually was the first to discover this, and I did more research, looked into it, and I confirmed it that it's insane. So we're on this 4-year cycle of this, Bitcoin halving, and then the markets start to pump ever since the Bitcoin halving for about a year or a little over a year. And this happens every 4 years. But that same time, when that Bitcoin halving starts, is when the monetary stimulus starts coming and gets capital injected into the system. And that's when the debt's getting refinanced. Yeah, so this happens every 4 years. And the next one is supposed to be in April of 2024.
Yep.
So back on what you said, that they're going to continue to pump the markets and keep it propped up for as long as they can. I totally agree with you on that. And I think they're going to do that again. And in 2024, around the Bitcoin halving, which starts in April, I think stocks and cryptocurrencies are going to pump to the freaking moon. This is going to be so massive. I think this is going to be one of their last big pumps, as hard as they can.